Here we are again at the TRADER24 studios. The energy problem seems never-ending as both gas and oil make the cost to businesses and households prohibitive, and Europe faces a significant threat of being left with very low gas reserves due to Russia's decisions. Taking into account the imminent and apparently defensive position of the head of the ECB, Christine Lagarde, regarding the, for the first time in 11 years, increase in benchmark interest rates, the spotlight is on the developments in the old continent. Inflation remains high at historic highs and with concerns about the short-term easing of pressures, while the political backdrop is not conducive to investment safety as Italy must immediately resolve its domestic issue, not forgetting that it is also the member state with the most risky sovereign debt exposure at a time when ECB assistance seems distant. In the government bond markets, there is silence, acknowledging the high average yields of 10 years in the US and Europe. The commodity market continues to worry with valuation ambiguity, while the freight market is also negative, as it is still more than 50% below the high levels reached in mid-May. You are watching the TRADER24 Global Market Overview. Let's take a closer look at the situation. On Wall Street, the board absorbed yesterday's big gains alongside a strengthening belief that the Fed will end its aggressive stance on rate targeting by refusing a new 100 basis points hike. The New York Stock Exchange Index closed around unchanged and after 11 signed swaps in a session that gave mixed signals. This is because while large cap closed with controlled gains in the S&P 500 with plus 0.59%, mega and ultra cap ETFs outperformed, such as the MGK at 1.5%, thus recycling the anticipation for upside continuation. Similarly, while the industrial Dow Jones ran out of fuel, closing marginally positive at 0.15%, the tech was in good spirits, gaining 1.58% thanks to the good performance of Meta of 4.2%, Amazon 3.9%, and Apple at 1.4%. The small cap followed with Russell 2000 at plus 1.59%. The signs were also mixed at the sectoral level, with 4 of the 11 S&P sectors closing negative: utilities, healthcare, consumer discretionary, and real estate, with telecoms and technology recording the biggest gains. The VIX Risk Index lost 2.53 percentage points without following the sharp crescendo, but still showed the bets in favor of the fall were diminishing. The main positive protagonists in large cap were Fossil at plus 8.60% and Netflix at plus 7.35%, while the Dow Jones was led by Salesforce at plus 4.97% and Disney at plus 3.75%. In the pre-market now, most listed companies are moving around unchanged, with the Chicago futures giving an opening around unchanged, at least for now. Asia closed with mixed signals. The Hang Seng was down 1.13% at 20,655 points and near one-week highs, with China's Premier Li Keqiang saying painstaking efforts are needed to stabilize overall economic performance, indicating a shift to more targeted COVID control measures. In Japan, exports rose 19.4% year over year and to 8-month highs, with the Nikkei closing positive at plus 0.44%, while the Australian 200 remained unchanged at 1-month high. Developments within the Eurozone may set the pace, not only in domestic markets but also globally, with all eyes on the political drama in Italy, with its implications for sovereign debt, and on the ECB's moves regarding interest rate targeting, with the market considering a 25 basis points rate hike after 11 years as a certainty. The markets in Europe have moved hesitantly. All the major indices, the DAX and CAC 40, the 50 and 600 Euro stocks, remained in areas of unchanged after battles in the signs and constant swings, and now there is also a lack of direction with tepid trading volumes. Flutter at plus 1.87% and Infineon at plus 1.64% are the biggest gainers so far. In the Athenian Stock Exchange, Greece also remains unchanged in the general and the 25 large cap indices, with the banking index outperforming by plus 2%. In U.S. Treasuries, sellers maintain their strength, leaving the 10-year yield at 3.03%, a few basis points below local highs, with that of the 30-year seeing 3.17%. The interest rate curve took a slight slope, with a 2-year around 2.97%, while in Europe, the German Bund sees a yield of 1.27%, the spread of the Greek is at 221 basis points, the Treasury at 178 basis points, and the gilt at 90 basis points. In the forex market, the truce in the interest rate war continued, with the US dollar lovers slowing down their purchases that have already driven the DX index to 20-year highs, although it is currently below 177 points. The euro stands 200 pips above the historical parity, the pound is just below 1.20, the Swiss franc at 1.0260, and the New Zealand dollar at 0.62. The yen-dollar exchange rate is also at a 24-year high and above 138.50 yen. In commodities, there is the problem of very expensive natural gas, with TTF at 150 euros per megawatt hour and Henry Hub at $7.70 per million thermal units. Gold and silver continue to be under pressure, with the former officially losing $1,700 per ounce, being on a downward trajectory and far from the highs of $2,060 a few months ago. And silver, having lost $19 per ounce for days now, is stumbling at 18.50, with a new reception level at 17.20. In agriculture, it was quiet, with most commodities closing around unchanged. Cotton remains at 10-month lows, coffee continues upward in its attempt to move away from 8-month lows, and corn is also at 7-month lows in the $6 per bushel range. Finally, in the freight market, the Baltic closed negative for the second consecutive time, missing its high for the month, mainly due to a 6.2% decrease in Capesize, with the Panamax closing positive at 4.4% and the Supramax seeing weak highs. Looking at the bigger picture, however, all of the key indices are losing between 50 to 70% of their value in a matter of months, having been overly burdened by the ongoing lockdown and supply chain imbalance globally. In terms of economic announcements, today all eyes are in Europe for the European Central Bank's interest rate policy statement and the level of interest rates for the coming period. Later this afternoon in the US, the results of the number of unemployed are expected, with forecasts showing a slight drop compared to June. Yesterday, also in the US, crude oil inventories were announced, which dropped by 446,000 barrels against expectations for an increase of 1.357 million barrels after the huge increase of 8 million barrels last week. In terms of corporate announcements, today we expect the financial results of Danaher, with projected earnings per share of $2.36 and revenue of $7.32 billion, AT&T with projected earnings per share of $0.6088 and revenue of $29.53 billion, and Philip Morris with projected earnings per share of $1.25 and revenues of $6.66 billion. Also set for today is CVS's dividend ex-date with a yield of 2.27%, up 9.25% on a quarterly basis. Yesterday, financial results were announced by Tesla with earnings per share of $2.27 and revenue of $16.93 billion, both above forecasts. ASML with projected earnings per share of $3.54 and revenue of $5.43 billion, both below forecasts, and Abbott with earnings per share of $1.43 and revenue of $11.26 billion, both above forecasts. The crypto market opened on a negative note as the ongoing troubles in the exchanges, which have been severely affected by the sharp drop in the market last month, continues. Following the lead of Celsius and Voyager Digital, this time the Singapore-based crypto exchange ZipMex froze its customers' withdrawals, while Vold, backed by Peter Thiel, filed for protection from its creditors in Singapore. Bitcoin and Ethereum have fallen back to Monday's levels, near $22,900 and $1,400 respectively, with the former particularly affected after Tesla's earnings call yesterday, where it was reported to have sold 75% of its Bitcoin holdings in quarter two. The altcoins followed a similar path, losing the gains of the last 48 hours, with a few exceptions such as Cosmos, Monero, and Stellar, which saw a slight increase. Thank you for joining us today. It was the Trader24 Daily Global Market Overview. Stay tuned for our next comment on the financial markets.